Hey guys, this is the Forex Price Action Trading Course Part 2. This is lesson number 4. Buys changes with targets reached. Okay, let's get going. Alright, here's a lesson overview. First, I'll be going over the basic paradigm of how bias change through a target reach affects a given bias, and moreover some basic characteristics of these targets so you can spot them in trading. And then I'll go on to a demonstration of locating targets for bias changes. So in this section, I'm just going to go through how I analyze and locate these targets that can change a given bias. Okay, the basic paradigm. During a given bias, if a target is hit in the process to the bias's main target, the bias will reverse direction, and therefore the main stop loss and target levels will also change. Alright, let me show you what I'm talking about. Alright, so here's a chart of the Euro-Yen weekly chart. Now let's say we measure the long strength of this pivot right here against the short strength of this pivot right here, and we found that there's more short strength than long strength. So in other words, this bias states that price is likely to reach this pivot low right here before reaching this pivot high, and moreover that the main target will be this level right here, while the main stop loss level will be right here. However, if price hits a target that has the capability to change the bias, let's say in this area right here, at this point, the bias will change from short into long. And moreover, the new bias is going to state that price is now likely to reach this pivot high up here before reaching this pivot low. Moreover, the main target and the stop losses also change. So at this point, the main stop loss level is right here, and the main target will be up here. Okay, so in this way, when a bias change occurs through a target reached, the bias itself will change from short to long, but also the main stop loss level and the main target level also change. Alright, so now let me explain to you some basic characteristics of these targets that can change the bias, that can help you locate them. Okay, number 1. Bias change targets are typically at strong higher time frame price levels, but although rare, it can be on the same time frame in which the bias was measured. Alright, so that previous bias that we measured was on the weekly chart. Now when you're looking for these targets that can change the bias, most commonly you'll find them on the higher time frames. Alright, so in this case, since we're measuring a weekly bias, let's go over to the monthly chart to see what we could find. Alright, so on this monthly chart, that weekly bias we measured was this pivot against this pivot right here. And we found that there's more short strength than long strength. So in other words, price is likely to reach this pivot low right here before reaching this pivot high. However, as price began to fall right here, immediately price came across a monthly medium-sized gap right here. And this monthly gap, due to it providing strong opposing long strength, changed that weekly bias from short into long. Alright, so in this way, these targets that can change biases commonly form with strong price elements on the higher time frames. Now this could be any other higher time frame strong price element. For example, if there was a strong legitimate trend line running across right through that level right there. Now let's say this had many legitimate touches on it, let's say about 7 or 8. In this case also, even if there was no gap at this level right here, this monthly trend line that creates strong long strength on its own is enough to be a target that can change that weekly bias from short into long. Alright, and the reason why the majority of these targets exist on the higher time frames is a basic rule I've been going throughout this course, is that each price element, the higher the time frame, the stronger the opposing strength it creates. Alright, however, there are times, although very rare, that enough opposing strength is created on the time frame that you measure the bias that the same time frame can also create a target that changes the bias. So let me show you that. Let's go over to the weekly chart. Okay, so let me just zoom out real quick. Alright, so on this weekly chart, an important thing to keep in mind is that if a bias is measured on this weekly chart, in order for it to become a target, it must create an extreme amount of opposing strength, in this case long strength. So for example, that'll be something in the range of a huge gap like this, or perhaps even a combination or confluence of weekly strong price elements. So for example, if there was a very strong trend line running right through these levels also, that had, let's say, 8 touches on it, this weekly huge gap and more of this strong long trend line may be enough to be a target that can change a bias. Okay, but more or less, I would say 95% of the time, these targets that change the bias form on the higher time frames. Alright, so let's go on to the rest of that text. Okay, however, targets are never on the lower time frames. So, define the strong levels on higher time frames and the time frame you measure the bias. Alright, so a basic rule is that these targets that change the bias will never form on the lower time frames. So again, if we're measuring this weekly bias, there's no need to look for targets on the daily or 4-hour charts. However, there is a need to look for targets on this weekly chart and more over the monthly chart. Alright, so let's go on to the next basic rule. Okay, number 2. A bias change through targets reached can be a single strong element that produces strong opposing strength, or a combination of strong elements that cumulatively produces strong opposing strength. Alright, so again on this weekly Euro-Yen chart, the bias was short between these two pivots. However, that monthly gap came in right at these levels right here, which changed the bias from short into long. Alright, and that monthly gap was a single element that changed this weekly bias. However, like I showed you earlier, there's also the possibility of a combination of elements that when put together provide enough opposing strength to change the bias. Alright, so for this example, let's go over to the Aussie NZD chart. Alright, so on this Aussie NZD weekly chart, if you watch my forecast and analysis, you'll know that I was long biased in this area right here. And the reason being is because there was more long strength between these two pivots. So as price came up, I was looking for long trades. However, at this point right here, if you watch my forecast and analysis, you'll know that I was saying that a target has been reached. And thus from this point on right here, I was short biased and thus looking for short trades. Alright, so let me show you the price elements on the higher time frame that created enough opposing short strength to cause a bias change. So let's go over to the monthly chart. Alright, so on this monthly chart, I was long biased between these two pivots right here. However, at this point right here, I was mentioning that price has hit a target, and thus the bias changed from long into short. Now, the price elements that cause this bias change on this monthly chart is this trend line from this pivot to this pivot right here. Now, as you can see, this trend line has 1, 2, 3, 4, 5, 6 touches on it. Now, this is a relatively strong price element that creates short strength. However, in my opinion, it wasn't enough to cause a bias change through a target reached. However, at the same time, I noticed a small gap on this monthly chart right here, which also produces short strength. Now, although this downward trend line and this small gap on its own does not create enough short strength to become a target, when put together with a combination of these two price elements, did create enough short strength to cause a bias change through a target reached. Alright, so in this way, you want to remember that it's not just single price elements that can cause a bias change through a target reached. It could also be the combination or the confluence of these price elements on the higher time frames. Alright, so let's go on to number 3. Okay, number 3. Bias change targets can form anywhere along the path to the main target, so beware of right-away target hits. Alright, so back on this weekly Aussie NZD chart, again I measured the short strength of this pivot against the long strength of this pivot and found that there's more long strength than short strength. So in other words, I expected price to reach this pivot high before reaching this pivot low. And so for this entire region up to here, I was looking for long trades on the lower time frames. However, at this point right here, a target has been reached and the bias changed to short. So in other words, price went to 85% the distance to its main target up here and then hit a target and changed the bias to short. Alright, so let's go back to that Euro-Yen weekly chart and see at what distance point that the bias changed through a target reached. Alright, so again on this Euro-Yen weekly chart, We measured the long strength of this pivot against the short strength of this pivot, and we found that there's more short strength than long strength. Thus, the bias stated that price is likely to reach this pivot low right here before reaching this pivot high. However, immediately, that monthly gap level existed at this price level right here and changed the bias from short into long. So price in this case only fell about 20%, its maximum distance to its main target, before that bias change occurred at this level. So it's important to remember, for example, if we had a bias of short between this pivot up here and this pivot right here, a bias change with targets can happen anywhere along the distance to its main target. It could happen right away, or it could happen halfway, or even right before it hits its main target at this level right here, which is actually quite common in real life trading. Okay, so now let me go on to a demonstration of how I will go about looking for these targets in everyday trading. Okay, a demonstration of finding targets. Alright, so the first thing I would do is to measure the pivots to find the bias and locate the main target and stop loss levels. Alright, so let's just go ahead and do that. Okay, so again, we'll use this Aussie NZD weekly chart. So I measure the short strength of this pivot right here against the long strength of this pivot right here. I found that there's more long strength than short strength, and thus I was long bias. And moreover, the bias stated that price is likely to reach this pivot higher up here before reaching this pivot low. And thus the main target is this level right here, and the main stop loss level will be right here. Okay, so at this point, I was looking for long trades in this entire area right here. Alright, now let me show you the next step I will take. Alright, so after I found the basic bias and located the main target and stop loss levels, I would then go on to identify the possible target levels on the higher time frames, as well as the time frame used to measure the bias. Alright, so again, since I'm long biased between this pivot right here and this pivot right here, at this point right here where I decided to be long biased, immediately I will go on to the higher time frames to see if there's any strong price elements that produce short strength between these two levels. Alright, so let's go over to the monthly chart. Okay, so on this monthly chart again, immediately after I found the bias was long at this level right here, even before this price action formed at these levels, I was already aware of this downward trend line right here, and more of this small gap at this level. So although the main target was at this level up here, right after I knew the bias was long on the weekly chart, I was aware that this level right here can possibly be a target that can change the bias from long to short. Alright, now here's a very important point. One of the trickiest things about knowing whether a target has been reached and thus a bias has changed is knowing whether or not those price elements actually produce enough opposing strength to become a target to begin with. Alright, so in order to solve this issue, I look to the lower time frames for confirmation. Alright, so let's go read number 3. Okay, number 3. Use the lower time frames price action to confirm target hits. Okay. Alright, so in order to confirm whether these two price elements had enough short strength to become a target reach bias change, I was watching the 4-hour chart, so let's go over there. Okay, so on this 4-hour chart, that monthly combination of price elements ran right in this level right here. Now simultaneously on this 4-hour chart, there was a fake double top that formed right here, which as you know, shows short-term long strength. However, as you can see, price still reached its target height level at these levels right here. Now because this fake double top shows short-term long strength, but price still pushed down to its target height level right here, this price action on this 4-hour chart itself shows that there was a lot of short-term short strength. So because there was strong short-term short strength on the lower time frames at the price level in which that possible target reach occurred, I was able to confirm through the lower time frames price action that it is very likely that that weekly bias changed from long to short. Now let me show you an example of the type of price action that would not confirm the target reached. Okay, so on this 4-hour chart again, as price came up right here, and formed a fake double top right here, if price did not reach its target height level, let's say at this level right here, and reverse direction to stop out this fake double top's pivot high stop loss level right here, if this were the case, that would actually confirm that those price elements on the monthly chart were not strong enough to be a target for a bias change. Alright, so let me just wrap up this whole sequence on the weekly chart for you. Alright, once again on this weekly chart, I was long biased, with the main target being right up here and the main stop loss being right here. And so I was looking for long trades on the lower time frames on all these areas right here. And then a possible monthly combination of price elements existed at this level right here. And at this point on the 4-hour chart, a fake double top formed that shows short-term long strength. However, price still fell to its high target. So at this point, I had confirmation that this weekly bias changed from long into short. Or in other words, price was now likely to reach this pivot low down here before reaching this pivot high. So in this area right here, if you recall, I was looking for short entries. Okay, so let's go on to the next slide. Okay, so that was it for that lesson. In the next lesson, I'm going to go over bias changes through recent strength. Now, if you watch my forecast and analysis, you'll know I commonly mention the term compact price action. Now, compact price action is a visual representation of a bias change through recent strength. Alright, so if you have any questions about this lesson, please leave it in the comment section. And I hope you guys have a great day. And thanks for watching. Okay, bye.